In one side, we're gonna have people in favor of the cause saying things like they are skeptical on how the big companies, as well as the government, deal with their personal data, saying that they are tired of paying unfair fees on all financial transactions they perform. In the other side of the spectrum, we may have people against the cause, saying that this is financing terrorism, this may be black money market, or this is all about financial scams. I am Diego, and you're watching Financial Flare Hub, your go-to destination for everything finance related, and I am thrilled to kick off the journey of this channel with some exciting topic lined up for you today, which is going to be the battle of cryptocurrency against banks as well as the government. Let's delve into it. To start this conversation, we're gonna need to dig a little bit deeper just on the basics of what is the bank system, the traditional bank system, and how it operates, as well as the basics of taxes and interest rates on the government side of things. And we're going to finish the introduction with the basics of cryptocurrency and its main idea. Our traditional banking system works in what is called fractional reserve system. When you have, let's say, $10 and you go to the bank and you deposit this $10 in your bank account, the bank is unlikely to keep all this money into its reserves. Instead, it's going to keep, let's say, $5, and the other $5 is going to be out for lending, either to businesses or individuals. What is interesting to note here is the multiplier effect it has on the money. First, it was $10, your money. Then, the bank has created another $5 by lending this $5 to other individuals. So it's your $10 that you still have plus the $5 someone else has. What it was $10, now it's $15. So how do the banks make money? So basically everyone has a bank account nowadays, right? Because it's safer to keep the money in the bank. By creating this safe space for everyone to keep their money, they have costs to operate, and they pass along these costs for you, for me, for everyone to pay. Those are administrative costs to keep the structure of the banks. So we have fees that we pay to the banks. Those are money they make for operating. Other way they make huge money is by lending. For example, when you or me, anyone really, takes a personal loan or a home loan, car loan, whatever it is, we are taking credit from the bank. We get this money, and based on an interest rate, they are going to ask us to pay them a plus. So we're going to pay them the money we got plus the interest rate. Now, the government piece. In this context that we are talking about, government has two superpowers. First one, interest rate. Oftentimes when we hear about interest rates, people are talking about inflation rates, and that's because interest rate is the most common tool to fight inflation rates. When we have high inflation rates, government is likely to increase interest rates so that it's harder for people to get credit from the banks to buy things. When this happens, it creates an impact in the supply and demand in the economy. So less people buying and spending money, we're going to have the prices going down. So what used to cost, let's say, $2, now because there's less people willing to buy things, it's going to drop down to $1.50. It's also fair to say that in the opposite side, when we have unemployment rates very high and the government wants to accelerate the economy, they are likely to decrease the interest rate. By decreasing the interest rate, the government is going to make people more willing to take credit from the banks for spending, financing their projects, and doing all those sorts of things to accelerate the economy. The other superpower, second superpower the government will have, is going to be called tax. So that's the main way the government is going to equalize the wealth, our economy. As we earn more money, we're going to pay more tax. The basics of cryptocurrencies. So the main idea of the cryptocurrencies, let's take Bitcoin as the example here. It was created to make our financial transactions with no middleman. If I want to sell something and my friend wants to buy something, so the buyer and the seller, we just transact with each other without the need of a middleman here, which is going to be the bank. So by taking off the bank from this equation, we don't have to pay fees, and there's no need for anyone else to know what we are buying or selling. How this happens? A big idea of the cryptocurrency is that this is encrypted, so no one would have access to my personal expenditures or how I make money or how much I make or how much I spend. The information is kept to myself. I disclose if I want. Big ideas here on cryptocurrency, the protection on the personal data, as well as taking down the middleman from business transactions. So we no longer need the banks. Great idea behind the cryptocurrency is that it's a very good hedge against inflation. Taking Bitcoin as example, it's finite, so we don't have a way to be printing coins or printing money endless. This is finite, so it's going to have a limit of money in the market. Other very good idea brought from this idea of cryptocurrency is data security, because by big companies, the banks and the government not having access to our data, we are less likely to be used and be fooled with fake news or things of the sort. So it's less ways for us to be manipulated. The third big point I would cite in terms of the goods of cryptocurrency is the fact that we are not paying taxes. Hence, there's more money to do whatever we want. One big negative side I would highlight in terms of the cryptocurrency is also related to tax, right? When we think of it, if there is no way for the government to know how much I make or how much I spend, if there's no track record on my financial transactions, I'm not likely to pay tax, or I'm less likely to pay a fair amount. When the government cannot impose taxes, what is likely to happen? The rich is going to become more rich and the poor is going to become even poorer. As a conclusion, I would say that for each side of the idea, we're going to have pros and cons, but it's going to be very hard to see an adoption of cryptocurrency the way the main idea was brought, which is going to be by taking off the banks from the equation, as well as keeping our information in financial transactions only to ourselves. Hence, the government wouldn't be able to track our financial records. I don't think this is likely to happen. Federal banks across the globe creating their own what they call cryptocurrency, which I don't agree. It's not cryptocurrency, it's just another way of making everything in all business transactions, all their money and the way they print money digital. So, what do you think of it? What are your opinions on the topic of the adoption of cryptocurrency in our daily lives? Do you agree with the adoption? Or do you think it's best to keep our records in the hands of the government and the traditional banking system? I'm keen to know, so give your ideas down below in the comment section and we will see you in the next video. See ya!